Welcome to Deer Wood Realty Show. I'm John Schenk. It's Friday, and I just saw a story I wanted to share with y'all. I mean, we've talked a long time about how home prices keep going up. Well, it turns out, based on this article here out of the New York Post, home prices hit a record high in June, the most unaffordable housing market in history. And you know, as an agent, I see a couple of things. One, I see house prices continually going up, even with mortgage rates going down. But I'm also seeing now, this is almost the end of August. This statistic is out from June. I'm also seeing there are price decreases. There's a little bit of softening in the market, not a ton, but there is some. But I did want to get into this article. Let's get to it now. It says home prices hit a new record in June amid an ongoing housing shortage, even as high mortgage rates continue to push affordability out of reach for millions of Americans. Now, I don't know that it's just a shortage, and we'll go into that in a little bit towards the end. On a monthly basis, prices climbed 0.2% according to the index. The upward pressure on home prices is making this the most unaffordable market in history, said Lisa Sturdivant, the Bright MLS chief economist. First-time and moderate-income homebuyers in particular increasingly are being left out of the housing market. That's her quote. Prices rose in all of the 20 major metro markets tracked by the index. And the Case-Shiller Index reports with a 2-month delay, meaning it may not capture the latest ongoings in the markets. And that's what I would say, especially if you're in St. Louis right now. Will the nicest houses still get multiple offers? Yes. Will you still have to go above asking? Probably. But for the vast majority of the country, I think things are going down. And I think even in St. Louis, there's things that are going down. I definitely see on a Monday, I see more price cuts than I have in a couple of years. It says mortgage rates have fallen since June, but there's evidence that even the decline in rates has not been enough to bring buyers back to the market. Some buyers are waiting for home prices and not just interest rates to come down, and that's key. It says there are a number of driving forces behind the affordability crisis. Let's see what they say they are. One is years of underbuilding fueled a shortage of homes in the country, a problem that was later exacerbated by the rapid rise in mortgage rates and expensive construction materials. I think there are a lot of houses, it's a use issue. That is, if you're using a house for short-term rental, if you're using housing for short-term rentals over owner-occupied, that does take up quite a bit of the supply. It also makes it more expensive because you can make your numbers pencil out on a short-term rental way easier than you could if you were just an owner-occupant. It says higher mortgage rates over the past 3 years have also created a golden handcuff effect in the housing market. Yes and no. The house prices accelerated with the mortgage rate increase, and that is the issue. It's the prices. You could drop the mortgage rate to 3% now. People that have bought in the last couple of years still wouldn't move because the house they have is they still bought a similar house for a lower price in the past. So why would they move again? It doesn't make any sense. And then it says sellers who locked in a record low mortgage rate of 3% or less during the pandemic had been reluctant to sell, limiting supply further and leaving few options for eager would-be buyers. One of the things I don't think they've taken into account is how beat up a normal buyer would be. I mean, can you imagine writing offer after offer, weekend after weekend, and not getting a house? And after a while, you just get sick of it. You're just like, no, I don't think so. I think I'll just wait. And I think right now in the market today, it's an issue of house prices being way too expensive, and it has nothing to do with the mortgage rates. I mean, that's what I think based on what I see right now. I had some questions and wanted to go over them with you, and we'll do that here. Switch over to there. What do you think are the most significant factors in contributing to the current affordability crisis in the housing market? I think that the short-term rental revolution has just caused single-family homeownership to be a disaster. I think there was a number of things that happened all at once that caused an even bigger disaster. I think there is a demographic shift. I think that there was a demographic shift. I think that there was this flu that caused people to maybe re-examine the importance of their life and what their house meant to them. I do think that there was an amazing drop in interest rates that that just fueled a fire that was already starting with houses being unaffordable in the first place. So I think those are the main contributors, those main factors. And says, how might the golden handcuff effect impact the housing market in the long term? Well, I mean, I think you're seeing it. If you bought a house in the last 4 years, you're probably not moving, maybe not moving ever. It really doesn't matter if the rates go down because you're not able to move somewhere else. What could change this? Well, assumable mortgages in theory could change this. There are businesses now that are trying to capitalize on the assumable mortgage. I don't have a problem with that. I mean, if someone was crazy enough to give out a 30-year mortgage at a rate that had not been seen previous or in a long time, there's nothing wrong with companies coming in to capitalize on that. And we might see an expansion of that over time. But, people still move, people still die, people still get married, people still get born. So it's not like the need for housing goes away. People still graduate college, people still get new jobs. There's these life events that happen that make it when you need to buy a house. It's time. Will people put off buying a house for a year? Yes. 2 years, maybe. 5 years? They probably weren't a big buyer in the first place. So that is what I think is going to happen in the long term. What strategies could potential home buyers use to navigate this challenging market? Well, right now in St. Louis, I think you make a straight up offer. And if you get the house, great. And if you don't, move on. The people that don't end up buying houses are the people that don't write enough offers, to be honest. And then, is there an option for assumable? Do you have a lot of cash on hand, but you don't have and have good credit, and maybe you're renting or something like that? Yeah, an assumable mortgage would make sense under certain circumstances for sure. How do you think the housing shortage will evolve in the next few years, and what impact will it have on home prices? Well, you're not going to build new houses tomorrow. I'm not so certain that it's a housing shortage. I still think it's a use issue. If you look at Florida, some of the boom places, they are seeing lower prices. I realize that the report that I read was from June, but this is August now. We're going into kind of a slow part of the year. Usually around November, things fall off. So I don't know that that's an issue. And then as far as building homes in general, single-family homes, I think you have like 4 major home builders in the United States. Maybe that's not such a good thing. Maybe that's causing some issues. Maybe we're having some zoning issues as well. Maybe not in my backyard comes into play. And maybe maybe there's this perverse incentive that says we don't want house prices to go down, especially if we own a house. What role do you believe government policies could play in alleviating the housing affordability crisis? Well, here's some of the things that I think the government could do. I don't think giving out grants to first-time home buyers for significant amounts of money is a great way to fix an already bad problem. I do think that I think they could greenlight zoning regulations a lot faster, environmental regulations a lot faster, and I think that at some point in time, I don't know if it'll ever happen in my lifetime, but when someone buys a piece of property, it's their property, and they should be able to do what they want on the property. The idea that a concerned group of citizens can come in with incentives to not get new housing built in an area and dictate the entire development is, I think, it's not great. And I don't think it serves anybody. How might the current affordability issues affect future trends in home ownership, particularly amongst younger generations? Well, I get worried about this because there's this thing called household formations. And they talk about household formations being the bedrock of single-family home ownership. And so if people decide that it's too expensive to start a family or to be in a family unit, it's possible that you don't get this family formation that you need for the single-family market. Do costs influence behavior? I definitely think so. I mean, Friends was a fascinating thing because they were like 30-somethings and they had rented a New York apartment. If you were in the Midwest at that point in time, and not in a major city like Chicago, you looked at it being roommates with someone in your mid-30s with quite a bit of disdain. What's wrong with you? Why are you still not married or with someone? Not saying that it's right or anything. I'm just saying there was definitely a stigma about it. As we go on, are more people seemingly not, being roommates and things of that nature? I think so. So I think it's a real issue amongst younger generations. Plus, they're kind of on the Instagram thing, where they see massive, beautiful homes all the time, and so they just expect more. I mean, your house built post World War II starter home is not something that the younger generations are going to think of as enjoyable, pleasant, or desired. In what ways could changes in mortgage rates influence buyer behavior in this highly unaffordable market? Well, what did they do the last time? I mean, when mortgage rates were very, very low, what did that cause? It caused a buying boom that now has us in the situation that we're in. We've now lowered rates. Rates are kind of in the sixes right now, in the low sixes. But the buyers haven't really come back out like in droves. What's that number going to have to be for them to do so? I don't think it's a number on the mortgage side. I think it's a house price side issue. And what are some of the potential risks and benefits of waiting for home prices to decrease before entering the market? Well, this is a fascinating question, okay? If you bought a house 3 years ago, you're up over 50% in equity, and you've done nothing to the house, okay? Many economists who are housing shills will say, well, we have record equity in housing, so the housing market is great, it's very strong. We're not going to see any defaults. We're not going to see any problems because you have so much equity you can tap into. My concern is that once you can't pay your bills as it is due to inflation, now all of a sudden you need to refinance your house at a higher rate. That's no good. Now all of a sudden you need to start using a credit card to pay your bills. Now all of a sudden all that record home equity is gone and you have to sell your house. Well, what happens then? You have nothing you can buy for the same value, but you need to move, so you lower the price of your house. Is it a crash? No, it's not a crash. It's just you have to be willing to stay in a house for a decent period of time if you expect some sort of return. It's no different than the stock market. If you buy an index fund, it really does matter when you bought the fund to start with and how much you contribute over time. That's what I would say are the potential risks to buying in home prices, waiting for home prices to decrease and entering the market. Look, if you're getting married, if you're having children, if you're doing something where you feel like you need to move. That's the best thing you can do. Just get it over with. Timing any market is somewhat a bit of luck. I'm not saying buy. I'm not that person, but I'm just saying, there is a time when you need to buy and it makes sense. There's a time when you need to sell and it makes sense. So with that, I'm going to head on out. Thank you for watching. Thank you for listening, and I'll catch you on the next one. Bye.